Hi everyone, so welcome to Accounting 10, and today we're going to talk about bank reconciliation. So kindly refer to this PowerPoint slide I uploaded on Schoology. So in the first few slides, you'll actually see this picture and some discussions about cash short and over, and also petty cash, but since we lack time, I'll just go to the main topic, which would be bank reconciliation. So we'll begin on slide 13. So here are some terminologies so that you'll understand the lesson. So first, we have a bank, or we use the bank so that we can put our money or our savings in it, since you wouldn't want to put all your money in your house. For security reasons, we deposit our money to the bank. And there are actually two types of deposit accounts. These are savings account and current account, also known as checking account. Now, what's the difference? For the savings account, when you put in money, you get to earn some portion of interest, and you also have the ATM card, so you can withdraw in any ATM machines. And then for the current account, this is the type of account wherein you put in money and then you're given a checkbook. And what you do is, with this checkbook, you can just write the amount and then you can pay other people with it. So the main difference here is the current account will allow you to issue checks, while the savings account will be your ordinary savings account wherein you have your ATM card. So what are the things that we consider cash? So that's your currency. So here in the Philippines, we have our Philippine peso. And then we have our coins here on the right. And also checks. What you see here in front of you is an example of a check. So here we have the check of the Bank of the Philippine Islands. This is signed by this person here, let's say Juan de la Cruz, and his wife. And then here, this is addressed to Veronica Nepomuceno with the amount, date, and the amount in words. And here we have your account number and the account name. Oops. So for the cross check, what's a cross check? Basically, it's a check with this two lines here. Now, what does this indicate? This indicates that the bank can only pay Roy Ang 12,345,678 pesos. So, for example, if this check gets lost and some other person tries to deposit this or to encash this in the bank wouldn't give it to the other person because this is under Roy Ang's name. Also, this can only be deposited to Roy Ang's account, meaning, for example, me, if I have this check, I can't instruct the bank to deposit it to my savings account because obviously I'm not Roy Ang. And then here we have an example of a manager's check. In real life, it's not black and white. It's usually it has the same color as the other checks I've shown you. But here, the manager's check is actually guaranteed by the bank. So how it works is, for example, I want to pay Clark Kent a certain amount of money. So let's say I want to pay him 3.263,100. And let's say he told me, okay, issue me a manager's check then. So what I'd do is I'd go to, let's say, my branch of account, which is BPI. I'll go to the manager and I'll say, I'd like to pay Clark Kent this amount of money. Now, what the manager will do is to check my own account and see if I have enough money. I have about to check if I have about like 3.263 or more pesos in my savings. And if the manager sees that I have more than enough or about enough to pay Clark Kent, then the manager will prepare the manager's check and ask me to sign here, okay, and then address this to Clark Kent. And usually they charge about like 50 pesos in the bank. And the reason for this is one advantage of a manager's check is Clark Kent will have this assurance that I actually have this amount of money, as compared to regular checks wherein I can just actually write 3.2 million even though I don't have that amount. So that will be detrimental to Clark Kent, because when he encashes it in the bank, he won't get any money. And also, what's nice about the manager's check is, for example, the manager checked and saw I only have like 1 million in my savings account. The manager won't prepare this one. So it's a type of assurance to the payee that indeed the payer, or in this case me, I have this amount of money. Now, so by definition, cash are items that are acceptable for deposit. So you have currency coins and checks. Now, this is an example of a deposit slip. If you've ever gone to a bank and tried to deposit money for, let's say, your mom or to another person's account, the teller will issue you this one, and that will guarantee, or that will serve as proof that you actually have put in money to, let's say, Netplay Inc. Okay. And then this is an example of a bank statement. Nowadays, you can actually check your bank statement real time. You can go to, let's say, BPI Express online or BDO online to see the withdrawals and deposits and your actual balance. But back in the day, they didn't have the internet, they didn't have real-time updating of bank statements. So in the olden days, what they do is the bank would have their own record of the transactions involving your bank account. And of course, you have your own record of your transactions at home. And what the bank will do is the bank will print out the summary of your transactions every month and mail it to your house. So during that time period, there could be a difference in the record of the bank versus your own record of your transactions. And given that, comparing the bank statement and your own recording of your transactions, you may see that the cash that you have in the bank is not equal to the cash that you have on record in your notebook. So usually they are unequal. Now, this is where bank reconciliation comes in. Okay, before I delve deeper into this, I want to discuss some terms so that it'll be clearer. So first, stale check. Now, what's a stale check? This is a check wherein the date is already past 6 months. So what do I mean? For example, today is November 19, 2017, and in my drawer, I find this check, which is August 16, 2006. Now, this is a stale check already because the grace period that you have to encash a check or to convert the check into cash would only be 6 months. Obviously, it's been years, and so I can't collect this 2 million anymore from whoever this is. Now, what do I do if this happens? If this happens, what I could do is I could go to the payor. So let's name this person Juan de la Cruz, and tell that person, to tell Juan that I was not able to encash the check or convert it to cash. And so right now, what I have is a stale check. Can you please write a fresh check for me with a new date in it? So now it'll be November 19, 2017 with the same amount. So, and then I'll go to the bank and the bank will process it for me and I'll have my cash already. So that's what you do if ever you forget your check in the drawer and it has passed 6 months. And then the next type of check would be an NSF check. This would mean no sufficient funds check. It means that in this case, let's say you have Juan de la Cruz as a payor, and Juan de la Cruz issued 2 million to Veronica Nepomuceno. But in reality, if you look at the balance or the cash that Juan de la Cruz has in his bank account, let's say it's just 500,000 pesos, then obviously he would not have sufficient funds to pay Veronica 2 million. Now, what will happen to this? There's this term called bouncing checks. So what would happen is this check will be returned to the payor, and the payer would have to either fund his account enough money or to change the check and bring it down to a lesser value, which he can afford. Then next would be a return check. Back in the day, you can actually do this. You can just cross out your error and then sign over it. But today, banks don't accept any erasures in their checks anymore. So the ground for returning a check would be misspellings and erasures. So what happens here is Veronica Nepomuceno won't be able to encash this check. She would have to go to the payor and say, can you issue me a check with no errors so that I can encash 2 million? Okay. And then outstanding check would be